Hello ladies and gentlemen, thank you for tuning in to Ascending Abundance YouTube channel. My name is Paul, I am a CFA CPA, but I'm not a financial planner. I am just exploring different strategies on how to make money with money. In this channel it's all about crypto, stocks, real estate or business. However we can make more money. On a day like today I just couldn't hold off. I recorded a quick session. Just wanted to see where we're at. So CNBC is my favorite go-to news channel. I'm not affiliated, not making any money for them. Love this title, something is breaking in financial markets. This is what's behind the scenes. There was something about jobs report coming in today, bigger than expected. I don't even see it in the news anymore. But either way, just taking a slightly longer term perspective. 30-year mortgage rates racing to 8%. Scary stuff, truly is. Let's look at how the markets are performing. So I am looking at, what is it, since July, roughly 3 months, of Bitcoin, NASDAQ, S&P 500, and gold. Everything is striking down, other than Bitcoin, but let's call it flat. I mean, if you go a little bit back, yeah, Bitcoin starts to lose its momentum. So anyway, we are barely in some positive. Oh, here we go. If I move it by a couple of days, now all of a sudden we're in the negative for Bitcoin and negative for every single other asset. So what's going on? Just a quick touch point on videos that I've created recently, how I would look at the macro situation. So the Fed is continuing to run down its assets. It's been down to just over 8 trillion on its balance sheet. Quick reminder, if we look at the last year, they continued to run it off. They nearly reached 9 trillion, sorry. Then there was this little bump in the spring for the couple of banks collapsing. It's hard to even remember those times now, right? Like SBV, whatnot. It's just kind of come and go, and the Fed continued to run off its balance sheet. So now down to 8 trillion, running off at about 95 billion per month. Hopefully they will continue. Who is buying that? So the reverse repo facility, this is where people park overnight cash, money market funds, all that stuff. So the cash has been declining for the last few months at least. We're down to 1.35 trillion, down from the heights of 2.4 trillion-ish. Well, let's call it 2.2 just to be safe. So from 2.2 down to 1.3. So how long can they go for? Well, there's another trillion. I don't think it's going to go to zero. It's probably going to land on something. Let's say it's 300, right? Just making it up. $350 billion. So $1 trillion is still available, which is enough for the Fed as well as the Treasury as well as anybody else to sell off those securities. There are buyers at these rates. So eventually this will run off, and then what? Then nobody's going to be sitting with cash at this magnitude. Nobody's sitting with $1 trillion waiting to buy treasuries. So until then, there are still buyers. We're still in the downtrend. And so long as the Fed continues to sell treasuries instead of buying treasuries, and the overall economy is kind of not creating any new loans, that means there's no money creation. So M2 money supply, which I've previously analyzed, take a look at my channel, 97% correlated with the stock market performance. The M2 money supply has been declining till April, then it went up a bit. I mean, probably that spring collapse that you saw, that like a tick mark on the Fed balance sheet, that's when the money was created again. It starts to reduce. So there's less money in the economy, 97% correlation with the stock market. So no wonder the markets are down. Now the economy though is starting to somewhat show signs of mini improvement. So ISM Purchasing Managers Index is up. It's still in the negative, but it's no longer declining as much as it was. Maybe this is a pre-holiday kind of orders. You can see it went all the way down to 46, and now it's up to 49 as of September. So the manufacturing orders are starting to kind of pick up. You look at Baltic Dry Index. This is the price of shipping stuff from overseas. I mean, it's not dramatically up, but it is quite a bit up from the low of about 1,000 up to 1,700. So that index is showing me that the international shipping rates are starting to pick up as well. The economy is starting to, the global economy is starting to kind of show signs of a little bit of a life. And there's still news about China, that their real estate sector is suffering. I know people that I talk to who are from China, they don't see any kind of slump in the real estates. I mean, sure, here and there, new construction was overdone and all that, but some of those developers are struggling. Sure thing, but overall, the real estate market is not collapsing, so I'm not overly worried about that. In the meanwhile, with all the volatility, in the stress on the markets and the high interest rates, and the fact that Fed continues to sell treasuries, that is impacting the fear index of VIX futures, is kind of showing the signs of life. But even though it's up to 20, to me that's too late. Like I had in my channel, so shameless plug, I had some videos on how to make money with VIX futures. Somewhere here, let's look at it. 6 months ago. So 6 months ago, I was talking about strategies as a gold mine for a trader. Option 1 is in part 1, part 2, part 3. Do take a look at it if you're interested how to play VIX. I do not touch VIX under 25. It could skyrocket really easily, then I short the futures for VIX, and then I wait for them to come down. Ideally above 30. Even better above 35. Wonderfully, if it doesn't reach those levels, you can sell call options. I do spreads, 30-35 or 35-45 spread on VIX. Pays phenomenally, but VIX needs to be higher. And higher to me means, let's see 25, let's see 27. That's when I got giddy about VIX, but hey, something to take a look at. My other strategies, Alexandria REIT, horrendously down. I mean, if you listened to me 5 months ago, this was a buy, and it kind of was to me and still is, and I purchased it. And I purchased quite a bit of Alexandria REIT. I'm still holding it, and I continue to hold it, but this thing, this thing is going to continue diving so long as it's tied to interest rates and so long as people are selling off. We might see further lows on Alexandria REIT. So if you listen to me and don't listen to me, this thing has been down 20%. So do your own research. This is where I'm saying I'm not an advisor. I just do analysis. I can pick up an undervalued situation, but it doesn't mean that situation cannot get even more dire. It could become even more overvalued. Things get thrown out of the water, just for the sake of the general market. So be vigilant and do your own research and be comfortable. Another thing that I was watching for, and I didn't create any videos on it, which was LTPZ, which is the an ETF, and it's not a crypto. This is a PIMCO 15-year TIPS index exchange. I'm thinking when interest rates are finally going to go down, this is going to be a great investment because it's 15 years. It's not the 30, it's not the 0. It's a 15-year. It's TIPS, Treasury Investment Inflation Protected Securities. So it's protected against inflation, has a little bit of a margin, and if inflation spikes, the yield on these ones will be higher. So it's U.S. Treasuries. They could deflate, they could debase, but they will not default. So the risk on these is zilch. But then if you compare LTPZ, it's down way more than gold or SPY or NASDAQ or whatever. So again, something that I've picked up a while ago and I'm already down on this. So another shameless plug, do not listen to Paul. I can do the analysis, I could be of use and interest with my analytics, but that kind of proves again that data alone is not enough. You need sort of thinking cap, you need to be interpreting those results well. I mean, thankfully, Bitcoin is doing okay. I'm an investor myself. I'm sort of a believer, if we could want to call it. I don't have like a strongest of convictions that this thing is going to go to $1 million. But given the recent work on the ETF front and the fact that all of the providers who are going to get approved eventually will start pumping it, they will start advertising it, they'll push it towards ESG funds. I do believe that Bitcoin, with the halving coming, I do believe that Bitcoin is a potential here. But I so believed in Alexandria, and I so believed in LTPZ, and I also believe in Royal Bank of Canada. Royal is one of the Canadian banks I invested in. I think I've done one of the videos on how to play options and do like a premium, collect the premium on the call options. If it goes down, you just collect the dividends. Well, Royal Bank is down 15% in the last, what, it's like 4 months, 5 months. So again, don't listen to me. Be diversified, do your own homework, or maybe, just maybe, this is a perfect time to go into those strategies, because right now with all the fear in the market and the treasury yields spiking, maybe this is a fantastic time to pick up some fixed income securities like Canadian banks, super stable, good dividend, wonderful stable businesses. LTPZ 15-year treasury tips, Alexandria REIT, one of the best REITs in the United States, tied to pharmaceutical industry, completely insulated from rent increases for the next 3 years at the minimum. That's when the earliest maturities come in. So wonderful companies, but it doesn't mean you're not going to be down. You have to have the guts to stomach the downturn. In the meanwhile, there's oil, there's other things that we could consider. So do your own research, but those are the strategies that I'm deploying. And in the meanwhile, my family and I are heading out to Portugal. So wish us luck. I might post a video from there, I might not. But that's the lifestyle that a combination of the job plus the stock market plus real estate plus crypto and all of that combined and dedication, that's what it allows us to do. Travel the world, chill while the market potentially crashes. And if I see VIX above 25, that's when I'm going to be trading. Even if I'm on vacation, I will start shorting VIX and waiting for it to come down and then making money off of that. Anything above 35 is just phenomenal. Above 40 is just a godsend. If you see VIX above 40, then if you have the guts to short the futures, you'll make money. That's been the history so far. Thank you so much for listening. All the best investing, and stay tight in these crashing markets. Hopefully get some cash on the sidelines so that you can pick up wonderful investments on their way down and then on the way up. Cheers. Happy capital.